Accruals are a fundamental part of business accounting. They help show the true financial picture of a company, even when cash hasn't moved yet. At its simplest, an accrual is an accounting entry that records an event that has happened, but has not yet been paid or received. By using accruals, businesses match their income to the specific period they earned it, rather than just waiting for the cash to hit the bank. This method prevents financial swings caused by slow payments, giving owners a much more stable view of their actual business health. Cash accounting is like a checkbook register, while accrual accounting is like a full financial map of the business's commitments. This chart shows how revenue can spike in a month where work was completed, even if the actual cash payment arrives later. Think of accruals as the grammar of finance. They ensure that all the numbers tell a consistent and accurate story about the business. Understanding these basics helps you read financial statements with confidence. Check back soon for more simple explanations on business and finance.